We live in a crazy world right now. So yesterday, 30-year bonds touched 5%. That's high. Today, because of weak jobs data, the 10-year treasuries are down by 3 basis points. My word, what is going on right now? Welcome back to the channel, everybody. Appreciate you being here. Let's start here with this article on yahoo.com. Oh man, it's getting wild out there, isn't it? Hope you all are having a good day. This article is titled "Wage Growth Keeps Slowing Down for Job Switchers." Yeah, I heard a little bit about this where they're actually cutting pay now. You know how they were raising the pay. It was $12 at one time, then it was $15, then it was 17, then it was 20, something like that. It kept going up and up and up. Well, with the tsunami of bankruptcies happening and so much lending, see that lending tightening, those interest rates go up, lending gets a little bit tighter. Now businesses have to make a little bit better decisions, right? They have a little bit less capital to work with because a lot of businesses are purely borrowing. Of course, there's been some struggles over these last few years. So now wage growth is suffering. It says here, leaving your job for that shiny new opportunity doesn't pay like it used to. New data came out on Wednesday from ADP and shows median year-over-year pay increases for job switchers fell to 9% in September, the slowest rate of growth since 2021. At their peak, workers saw roughly 16% year-over-year pay increases on average, more than double that of those who stayed at their jobs. It says, but Wednesday's data showed the difference between wage growth gained by leaving a job versus staying is at its slimmest margin since October 2020. You know, they haven't listen, and jobs have taken umbrage to the quiet quitting. That's number one. Also, working at home, remote work, whatever they're calling that now. They want people to come back to these jobs and they want them to stay. Is this not major incentive? So you're seeing this across the board to force people to stay at their jobs longer term, right? As opposed to now where there's a very YOLO mind state going on right now where the people are like, if I don't like a job, I'll quit that. I'll get this job. But also another thing that's been taking place that's going to put pressure on job seekers in the job market is that what I've been hearing, a lot of jobs are not hiring. They're being very, very specific. They're putting the workers through a lot of different rigors, right? A lot of different tests and stuff to really, really strain out those who may not actually want to stay there. So that's another thing that has been going on. So it says here, it says, quote, we are seeing a steepening decline in jobs this month, unquote. ADP chief economist Nella Richardson said in a press release. Quote, additionally, we are seeing a steady decline in wages in the past 12 months. So once again, the people are going to have a lot of mountains to climb over. So there's declining wage growth. You have inflation ticking up a little bit. You have a tsunami of bankruptcies. Bank branches all over the place are closing. And it's definitely not because they want to change their business model. They've been doing terrible, especially with their new capital requirements. You have that going on. There is so much going on. Bonds on a rampage. But let's go here to another. I just want to read this to you so you can get the exact information. It says here, treasury yields fall. This happened today, this morning, folks. As of October the 5th, 2023, U.S. Treasury yields fell by 3 basis points to 3.621%. The benchmark 10-year Treasury was down 3 basis points to 3.621% after having surpassed the 4% mark last week. The yield on the policy-sensitive 2-year Treasury was flat at 4.099%. Treasury yields are considered safer investments relative to stocks. Well, we know that. That's why. Well, let me read that again. I want people to hear that clearly. Treasury yields are considered safer investments relative to stocks because they are backed by the U.S. government. You know, I try to explain this to a lot of my crypto people. And this is the main cause for liquidity drain. As you saw, when that 30-year went up, liquidity drain from crypto, liquidity drain from stocks, liquidity drain from commodity, definitely commodities. I see that. I'm heavy in commodities, right? So this is something you have to keep your eye on. Once again, I just want to clarify that the 30-year went up yesterday. It was October the 4th. It says here from investing.com, U.S. 30-year bond yields reached 5%. October the 4th, reached 5% for the first time since 2007. So there's all types of wild stuff going on. That's why I said this is like the wild, wild west right now, right? And the government is crushing everything in sight. I'm telling you right now. So now let's move on to a little bit of stock market news, a little bit of stock market news. So this is from investors.com. Dow Jones falls after jobless claims. Rivian dived 14% on debt offering. The Dow Jones Industrial Average dropped Thursday after Labor Department's initial unemployment claims. Meanwhile, Rivian stock plunged after the company announced a debt offering. First-time jobless claims rose to 207,000 versus 204,000 in the previous week. I'm very surprised at that. I've seen so many videos and read so many articles about people getting laid off, right? That and also the Fed has been making this business to let it be known that more people will have to lose their jobs. I still can't believe they said that. That was some months ago, but that was hilarious how bold they are. But it's true. When you raise those interest rates, people are going to lose their jobs, right? So they were expected to rise to 210,000. Okay, so see, that's more reasonable. That's more what I would expect. The jobs report from the labor market looms Friday. Wall Street expects the update to show moderate strength with 150,000 new jobs. The jobless rate also is expected to tick down to 3.7 from 3.8%. Average hourly wages are seen growing 0.3%. Yes, but we just read about what's really going on with wages in that prior article. It says here, after Thursday's opening bell, the Dow Jones Industrial Average fell 0.2%, while the S&P 500 lost 0.3%. The tech-heavy NASDAQ composite moved down 0.3% in the morning action. Among U.S. exchange-traded funds, the NASDAQ 100 tracker, Invesco QQQ Trust, fell 0.3%, while the SPDR S&P 500 ETF dropped 0.3% early Thursday. Early action also showed the 10-year Treasury yield falling to 4.71%, adding to Wednesday's losses. Still, the 10-year yield is just off its long-term highs. Oil prices extended their declines, falling nearly 2%. Thursday morning, West Texas Intermediate futures traded below $83 a barrel. So that's what's going on, folks. Appreciate you being here. So now that you have that information, what are you going to do with it? I know what I'm going to do with it. So until next time, folks, let's get to the money.